How you doing, friends? New week, same story? No, different story. This is the 0DTE morning market analysis, and I've got some news, some updates, and also a fresh outlook for you. So this is the market analysis for July 28th. It's Monday. There were overnight highs that seem to have faded a bit, and I think the gap up that we had overnight was mostly because of the EU trade deal, but that seems to have been erased for now, with the S&P pulling back gently around 64.30, and the VIX is in super zombie land, or starting to get in super zombie land. Some might call it whispering calm at 15.23, but the week's calendar is humming. All right, I'm talking about the economic calendar. There's nothing today, by the way. However, we have jolts coming up and consumer confidence, etc. But we also have rate cut meetings on July 30th. So we'll have the pleasure of hearing Jerome Powell and what his forward outlook is. I think his days are numbered, but we'll see. There's all, like I said, consumer confidence tomorrow. You could that could add a quiet little nudge to this all-time high. And this weekend's U.S.-EU deal talked about 15% tariffs across the board for EU goods coming into the United States, but no reciprocal tariff, and opening up markets to the United States into Europe. And also Europe pledging $600 billion in investments and big energy buys, etc. Actually, I think the total was about $1.2 trillion. So it's a big deal. However, while it sparked an initial lift, and that's what accounted for the gap up when the futures opened up last night, and I'll show you that in a second, the reactions appear to be mixed, or mixed praise, and a lot of worry about costs. So there are geopolitical echoes from BRICS as well. They're making a play for the monetary reserve. And overall, it's a low vol rally with narrowing ranges. It's holding it kind of light, seeking small edges over big moves. So it's a little bit confusing. We're at all-time highs, and particularly on what appears to be a really big deal, but it's been downplayed. And so let's take a look at. The big announcement that I have is that I am entering a new campaign, a trade campaign, and I do this periodically within my coaching service to demonstrate the efficacy of our setups and our strategies. And each time I've increased my account size. In the beginning, I started relatively small, around $23,000. Then I moved up to a sub six-figure account and then continued on with that. And now I'm going to a much larger account. And in order to demonstrate, the difference between trading, say, single or two positions at a time and multiple positions at a time, really compressing everything in, so it's going to be pretty exciting. But the thing I wanted to point out really was what was consistent across all of my trading campaigns. And I think that that's what will be demonstrated here, particularly when I go to a much larger capital size. For this account, I'm going to probably go to like 300,000 or so. And so what I want to show you, not the VIX, I want to show you this. Where is it? So it's not there. Preview. Yeah, this is what I want to show you. All right. So I'm just filling up the window here. So this is, let's see, this right here was my initial well-kept records account that I did in my coaching service, and I started out with a relatively small account, just under the pattern day trader rule of $23,000, and showed that I could double this account and really show great performance with the strategy. And the thing that I want to point out are the metrics that I really focus on. And those are the ones in blue over here on the left. And you'll see, of course, 114% return over almost 500 trades, a win rate of just under 50%, an average win to average loss of 1.71 or almost 2 to 1. And this is a biggie right here. Very low drawdown. That low drawdown and really resulted in very tight bottom left, top right performance. And as you can see, that's a fantastic equity curve. So this is it was really a great example to show members about how to trade with very small risk and large potential return, and how to manage trades in a very consistent way, no anxiety, never really, in fact, we don't even manage our losses. That's how cool this strategy is. We do not manage losses, we only manage profits. And we get this kind of performance. And this is perfect for a compounding strategy. This strategy scales and compounds. Now, my average risk to reward in this account was 1 to 10. Now, most people are happy if they have a 2 to 1, or maybe even a 1 to 3. They think that that's like outrageous. But I'll tell you, when you see my upcoming trade log, it's going to blow your mind. But the most important factor here is the Sharpe ratio, and I wanted to point that out. All of my accounts have Sharpe ratios in the 5 range, 5 to 6. Now, what does that mean? What is the Sharpe ratio? Well, see, the Sharpe ratio is how much money you're making for the risk that you're taking on, for every unit of risk. And most traders have a Sharpe ratio somewhere between 0 and 1. Very successful. Now that would consist of probably 50 to 60% of all traders. Maybe another 40% have something between a 1 and a 1 and a 2, right? And when you start approaching 2, you start approaching what would be considered like a pro-level trader, or someone who's been in it for a while and has found some consistency. And you get above 2, now you're starting to talk about traders that are elite level. A Sharpe ratio of 3, now you're talking about institutional trading capability and hedge funds and algorithmic traders, that sort of thing. You get up to 4 and 5, now you're starting to talk about high frequency trading where they never lose, right? But I'm telling you, with my discretionary trading, I'm trading above that, above elite high-frequency trader performance. And it's not a flash in the pan. This is consistency. You can see this is over almost 500 trades. Now I can show you another account that I did, which is using a little bit more money, about $85,000, and brought that up in a short period of time, about, I don't know, just a quarter. And brought it up 24%. Win rate was a little bit higher here, and that's because there was a shift in strategy, and so that was really dependent upon the level of the VIX. The VIX was much higher. We were trading more big-ass flies and that sort of thing. So there was a large percentage of those trades, but it's basically the same strategy. And a Sharpe ratio of 5.25. Max drawdown never went below or never went above 5.4. 5.25 Sharpe ratio. Now let's take a look at this most recent account that I did over the past month. Well, over the past 37 days. So returned about 4 or 5%. It's a close to $100,000 account. Profit factor is much higher, 2.8, and the average win to average loss, 3.8, almost 4 to 1. The win rate is only 42%. Now I'm getting to the important part. Max drawdown never went below, or never went much above 1%. In fact, it stayed below 1% It's practically no no drawdown. The average risk to reward, I've increased it dramatically by switching to what I call convex trades, pushing trades way, way out of the money, and being a little bit more selective on my trades with a Sharpe ratio of 7. Now, I am showing doing this account after account after account. This is elite, beyond elite performance. What I'd like you to do is go to Grok or ChatGPT and ask it about somebody who is consistently trading with a Sharpe ratio of 5 or above, and ask them what that means. This is what I am showing my clients, how to trade like this at elite performance, almost to the point of high frequency trading. All right, and this has all to do with our convex setups. Now, what I'm going to do is I'm moving to a much larger account, and I'm going to start trading at a much higher frequency and start reporting those on a semi-daily basis. So, because I don't know if I'm going to actually take a trade every day, so I can't promise you that that I'll be putting out a trade every day, but I'll attempt to. And it will, let's see, I'm going to go back to the big head here. So the trades will encompass our convexity strategy or fat tail. And if you want to trade this way, by the way, or learn how to trade this way, you can go to my school community. It's school.com/fattail. The link is down below. And learn how to trade like a high frequency trader. Be able to go from bottom left, top right, and never waver. Have consistency, not just day over day or week over week, but month over month, year over year, with consistent compounding results. Now, I'm going to show this in a bigger way, like I said, with a much larger account, and show you all the trades that I do. I'll be completely open and transparent about everything that I do. So this is the new change, at least from your point of view. For our coaching clients, it's pretty much the same old thing. We are just, maybe moving to a slightly different aspect of trading. I think that it's time now to show my coaching clients how to trade with a larger account and how these strategies do scale, in fact. All right. So that's the big news. I will also be sharing a lot of the work that I'm doing with AI and how it helps me manage these types of accounts. It would be tough to do it without AI, or at least to have like a team of analysts behind me. When I was an institutional trader, that was kind of a given. You had a team that would prepare everything for you, and then they would provide a report and where all the opportunities are and so forth. And then so making trades was it was supported. That's kind of tough when you're running a service, running a business, and trading on your own, and you're taking on a bigger piece of the pie. But with AI, it makes it simpler, and I will also be sharing a lot of that with you as well. All right, there you go. I'm ready for a big week. Are you? Like I said, we have rate cuts coming on July 30th. I don't expect to see a rate cut, but I do anticipate some change in the narrative. All right, there you go. Everybody, hope you have a great trading week. Stay tuned. Coach Ernie, I am out.